Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Before we get into this video, today's date is Wednesday, November 11th, 2020. I'm going to discuss the bank stocks. We're going to look at charts. Are they buys? Are they sells? Are they no touches? And again, the no touch would mean the chart is not signaling upside or downside with a high significance, meaning that the ratio of win-loss would not be enough to coax you in the trade. All right, before we get into that, just a reminder, you can follow me on Twitter at Gareth Soloway. You can also come to InTheMoneyStocks.com. That's where the big money is made. Look for my name at the top of the website. You can see it drop down underneath my name, and you have verified investing alerts and verified option alerts. Both are swing trading products, meaning we buy and sell in multiple days to weeks. And again, for those people that work out there, that is the ideal product. I also give daily videos in verified investing alerts with hardcore analysis, time counts, cycle action, price pattern and time. And I basically teach in those videos. Those that watch them religiously learn an insane amount of knowledge. Lastly, I'll just mention that this year in verified investing alerts, which is swing trading stocks, I have 188 closed out trades for over a 1,600% gain. Congrats to those members that have been with me all year. Massive profits. All right, let's look at Goldman Sachs here. Goldman Sachs is trading up slightly on the day. The biggest thing that jumps out to me is this consolidation. This is classic bullish consolidation. You can see very clearly if you put a trend line here and here, this is a clear bullish pattern. This signals that with a pretty solid rate of success, it will likely go higher. Now, in all fairness, the stock has rallied from about 185 all the way to 220 in the last week and a half, so I wouldn't be a buyer right here. Remember, price entry is everything. You have to remember that, meaning that if you're too eager, you're going to get yourself in trouble. Wait for a pullback on this. I do think you'll get it. I would be looking for this area right here, right around 204 to 205. I'd be a buyer there with an upside target of this double top all the way at 250. So again, you're talking about from 205 to 250 as a target on Goldman Sachs. But again, this is a strong buy chart on any decent pullback. Keep that in mind, folks. I think it's going to be a great opportunity. Next, let's take a look at Morgan Chase Jpm. Short term, it went up into a little bit of resistance and stalled out. All right, so it's had a big run just like these other ones. The chart pattern is not as bullish as Goldman Sachs is, which makes a lot of sense. Remember, Goldman Sachs does a lot of trading. Volatility has been fantastic, so they're getting a premium. Their chart is better because of trading profits. JP Morgan does a little bit of that, but it's also a bigger bank as well. JP Morgan Chase, obviously. And therefore, they have more exposure to the loan losses, more exposure to interest rates and loans and so forth like that, which puts them in a slightly weaker position. What I don't like here is this big drop and then this choppy inside bar bearish pattern. So yes, it had a nice move recently. We obviously know as soon as that COVID vaccine was announced the other day on Monday, this thing had an up 13-14% day. It was a great day for the stock. I would not be chasing it because this overall pattern is not very bullish. Next, let's take a look at Wells Fargo. Now, Wells Fargo does get my short-term interest, and the reason I say that is because of this trend line. This is what I'm keeping an eye on, folks. The stock is still very close to its multi-year lows, just off of it in the last week. This is the line you want to follow. The reason is I don't know where this is going to be in 6 to 12 months from now, but if you can break this trend line in the short term, you have an easy upside target of about $34 to $35. So the trend line is around 25 with an upside target of $34 to $35. To me, that's a great risk-reward setup, but the key is, again, it needs to get through this downsloping trend line. Very clear trend line here. It doesn't take a genius to see this, right? So again, pivot high, pivot high, pivot high, and we're basically kissing it here. If you can push above that, look for further upside to take hold over the next few months, I would say, taking you to about a $34 to $35 price target. Lastly, let's take a look at Bank of America. Bank of America is an okay chart. I would call it more of a no-touch than anything. The chart, obviously, just like JP Morgan, had a big move. Same thing here. You had a big move down, and this is all inside bar action. Again, I don't love it, so therefore I don't touch it. I don't like it enough to go short here, but at the same time, I certainly don't like it enough to go long, and that's the criteria for no touch, is that when you don't love it either side of it, you just leave it alone, and you let it play out, and then ultimately it'll give you another great setup. Okay, so keep an eye on that. The only one I really love right now, Goldman Sachs on a pullback. That's a strong chart, and Wells Fargo. Wells Fargo, Goldman Sachs look good. Wells Fargo, you look for a breakout above that key level. On Goldman Sachs, you buy on any decent pullback to around the 204 to 205 level with a target of 250 to the upside. All right, guys, have a great rest of your day. Don't forget, come follow me at inthemoneystocks.com. You can look for my services under my name, verified investing alerts, verified option alerts. You can see the track records on each page. They're fantastic. They're verified. You can come check us out. Have a great rest of your day. Take care.